Hello, friends, readers, viewers of the ETCFO and ETBFSI.com by the Economic Times. My name is Amol Dete, and you're watching this special episode on the Union Budget 2026. Friends, in fact, this is the last episode of the pre-budget live session series. This is the fourth episode. Please remember, every year we conduct pre-budget discussions live in January. We bring the change makers, the leaders, the BFSI, and the finance world, and try to learn from them path the government should choose or how government should approach the union budget. So this is the last episode. I'm sure we will have a productive discussions and you will enjoy the conversations. Let me ask you that please shoot your questions if you have any specifically on the budget part. I will take those questions with the speakers I have. So let me begin by introducing you to the speakers of this particular session. My first speaker for this live session is Dr. Rajan Pental, Executive Director at Yes Bank. Rajan sir, good to have you.
Oh, it's my pleasure. Good afternoon, everyone. It's always a pleasure for this conversation and involved in a very interesting conversation around the budget where certain things are known and certain things are yet to open up.
Absolutely, sir. My next speaker is Ms. Kanika Pasricha, the Chief Economic Advisor at Union Bank of India. Kanika ji, glad to have you.
Hi, everyone. I would say it's an honor to be part of this August panel and hope that while budget expectations are a little tame this time, we really hope and pray that the finance minister surprises on the upside. Thank you.
Certainly, let's see what kinds of surprises we get. Speaker is Mr. Pranav Haridasan, MD and CEO, Axis Securities. Pranav ji, good to have you.
Hi, Anmol. Hello, everyone. Very excited to be part of the panel. Thank you for having me.
Sure. My next speaker is Mr. Prithvi Chandrasekhar, the CEO of Consumer Finance Incred. Prithvi ji, glad to have you.
Hello, Amol. Hello, panelists. Great to be here. Looking forward to a good discussion and a very positive, long-term oriented budget.
Sure. Sure, Prithvi ji, your frame is quite positive from the BKCI case. My next speaker is Mr. Kaushal Shah, the Managing Director and Head Equity Capital Markets, Kotak Investment Bank. Kaushal ji, good to have you.
Thank you. Good to have and good to be part of this particular panel. There's always a lot of expectation from the budget, and we'll see how this budget helps in terms of, at least at this point of time, the point of discussion has always been markets. But I think beyond markets, let's see what the industry take is from the budget.
Certainly. So, dear speakers, let me shoot my first question to all of you, which is quite common, and that is what is the common question from everybody, and everybody has is what is your basic wish list from the finance minister, which is going to open her pitara or the red, red with on the Sunday, and we will know what the budget is. So what is your wish list? What are the things that you think finance minister should not miss this time? And Rajan sir, let me begin by asking you this question first.
Now, the fact remains is that our previous few budgets have been very forthcoming. And there is a lot of clarity in terms of the layout and the movement, forward-looking movement by the budget expectations and fulfillments. And as we started the discussion, there is actually, for the first time, we all speakers will be falling short in terms of what is the expectation, except that we need to fuel the economy. We need to have the capex coming in. Largely the private capex, and we need to work on the employment generation, skill development. We have seen tax rebates, we have seen all those kind of things, right? But two parts which are extremely important: how do we keep the deposit mobilization on, and what kind of support can come from the government, and the last being where we as a country, like the rest of the world, is going to face Mr. Trump, and how do we insulate some of our sectors, and how we redeploy some of the resources which are today into a sector where the export is happening over there. How do we come for their rescue, and what is it we do? How do we help them to expand their reach and network. So these are easier said than done, but would be very critical to see what we can. We have seen tax slabs being changed. We have seen the liquidity interventions. We have seen GST rationalization. So now I can only say two things very clearly. One, the economy has to go, consumption has to go up, right? Now, what all factors within limited scope you can expect from the government would actually be very interesting to see.
Okay, I think that was good to begin with, specifically from a banker's perspective. Let me bring another banker here, but who's an economist and maybe give a better perspective on the economy front. Kanikaji, please go ahead and share your wish list.
So thanks a lot, Amol. And I would, I can't agree more with Dr. Painter when he talked about that. Of course, budget as a document is important, but still the government is like compliments to them. They're pushing for reforms outside the budget as well. Now, most important from an economist point of view is fiscal, because budget is at the heart of it is actually a fiscal policy balance sheet for the government. And there actually we see that the pace of fiscal consolidation needs to slow down. And we think that's going to happen because the government is committed to balance fiscal or macro stability considerations with the growth considerations, with the kind of tax boosters they've given in the last year, income tax cut, GST rate cut. So growth consideration is important in a volatile world. Still, a lot of cyclical headwinds have started to reverse this year. So they space to at least consolidate by 20 basis points or so, from 4.4% of GDP to 4.2%. Now, moving to the next point is like you said. Now, let me turn on the hat of a banker. Now, a long pending ask of banks has been that the tax rate on deposits is not getting aligned, or broader fixed income is not getting aligned with that of equities. Of course, to boost capex, we cannot do a complete alignment, but some rationalization between fixed income and equity in terms of taxes. Otherwise, across the income spectrum, even today to a senior citizen, we are telling them that it's better to take risk, because risk, even if you look at risk adjusted returns, deposits are falling short of that of equities. That's actually hurting the banks a lot. They're under a lot of pressure, and we need them to fulfill the Viksit Bharat dreams. Now, of course, we need local capital, like Sir said. Dr. Painter talked about government has played the role of capex booster. Now, time to turn on the baton to private capex. So maybe some reforms here and there on ease of doing business, incentivizing private sector further. Maybe some specific measures for MSMEs will be on close watch because they've been hurt the most due to tariffs. Last but not the least, I would say we need to supplement local capital with global capital. Over the last year, both foreign portfolio investors putting money into debt and equities and the long-term FDI investors have considerably slowed their investments in India. So can the government come up with measures to attract foreign capital? We need that urgently to address A, capex needs, B, very important. The kind of currency we need more. We have demand for dollars. The supply of dollars needs to come in at the current juncture. So maybe some tinkering with capital, long-term capital gains taxes, um, um, coming up with measures to lay the red carpet for foreign investors will be on close watch from our side. Thank you.
Meaningful points, Kanika ji. I think मुझे लगा कि हो सकता है Rajan sir and Kanika will also speak about 5 days work, which perhaps finance minister will announce. Specifically, bankers have been asking for it since long.
Oh, PSU banks have actually got hurt on that because yesterday we had a
Right.
nationwide strike. But let's
Absolutely.
see. Let's hope for something good there as well. Thanks.
Sure. Prithvi, let me bring you here specifically on the NBFC consumption and a lot of financial sides. What are your expectations, Prithvi?
The government has already been on a good path in allowing for and promoting middle class consumption. Dr. Pentel and Kanika talked about this as well. but we have seen some easing of liquidity. We have seen some income tax and GST rationalization, which certainly helps. We've also seen that come through in terms of credit growth, both to the broader economy and to the NBFC sector, which is welcome. And this is one of the most important things we will need to continue to deal with the volatility in the external environment, which isn't going away anytime soon. So for us to continue to grow at 7% plus in India, we will have to be consumption led, and that consumption stimulus is something that I want to continue. I hope that the finance minister goes even further in terms of fiscal measures or tax rationalization to support consumption. The second thing I'd add is less about the NBFC sector and the short term, and more about the budget as a mechanism that can send a signal to the broader economy. And, if I look out over the next 7 years, over the next 10 years, the most important thing we will need to improve on as a country is productivity, right? Both capital productivity and, most importantly, the productivity of our people. And we sometimes shy away from this by talking about education, but actually getting down to we need more work produced per hour or per rupee of cost is something that I would love for us to focus on and for the finance ministry to lead the agenda on. Because over the medium term even, our sustained growth as an economy is going to be driven by productivity. Right? Consumption will take us through to the 5-year mark, 7-year mark. From there on, we will need that productivity to come in. Kanika, this is a very economist point. You may want to add to that.
So sure, noted your points. Prithvi, let me go to Kaushal. Kaushal, first, obviously, is a wish list. Many topics have been covered, but I still wanted to add the wish list. And also, please add specifically from your perspective in terms of what is it that the government should do now, so that the foreign investors will find Indian market more attractive. Of course, Indian story is picking up, no doubt about it. But what is it that the red carpet theory, which Kanika just mentioned, should government focus on specifically in this budget so that the foreign investors will find India far more attractive than anyone else?
Yeah, thank you. So I think let me just give data points first. If you look at CY25, the total FII outflow was somewhere around about $19 billion, right? Now, if we split that into how much of this outflow in the secondary market, that is somewhere around about $27 billion. But how the FIs have participated in some of the equity transaction, it is somewhere around about $8 billion. So clearly we find that FIIs are taking money out. And of course, there are reasons. And if I have to look at from the FDI perspective, last year there was a total inflow of $34 billion. They have monetized and taken out money $21 billion. So net basis around about $12 billion, right? Now, if you look at the foreign investors' perspective, the aspects that attract them or they like basis which that they come in is in terms of the political stability, in terms of growth. Geopolitically, we are quite balanced, and the fact that we have strong macros, right? However, there are two aspects which is a little bit of a issue from the investors' perspective at this point of time. Is one that they are not seeing earnings growth, right? And there is always if you look at from a valuation perspective, there is a growth multiple to the growth, right? And while the question that is going in their mind is that while our macros and the GDP is so strong, why it is not going into the earnings growth, why the corporates not able to show the growth? And some of the points highlighted by my colleagues is that while there is a government capex, why isn't that they are seeing enough capex from the private segment? Right? Now, is it in terms of the fact that from a growth perspective, from the use of capex perspective, are the corporates not seeing it, or they need some bit of support, whether it is in terms of incentivization or PLI, the way the government has done all these years? Do they need it just so that they are a lot more bold enough to have more capex, right?
Right.
So I think that is going in the minds of the investors in general. And the second point is that while of course the FTAs that the government are signing is good for some of the industries, some of them it may not be. But how is it that they can, on one side, safeguard the industry where it is opening up, right, and give them support just so that it doesn't get negatively impacted? But at the
Okay.
same time, it's an opportunity for many of the industries which do get the additional market from a growth perspective. Net, I will just say that from a budget, I think a lot has been said. But what the market generally likes is in terms of continuation of policy measures. Of course, they don't like negative surprises. So to that
Right.
extent, while the government has done a lot in terms of whether it's a PLI or a GST rate cuts and so on and so forth. I think the idea is that they continue with the investments, they continue with the employment generation, to see measures where the consumption is not only at the top end of the population, but it's a lot more broad based at the middle class and the lower class, just so that just revives the whole economy. Again, not necessarily from the macro perspective, but on the ground situation.
Certainly, Kaushal. I think noted your points. Detail one. Pranav, let me bring you here into the conversation. Thanks for your patience. The question is obviously first part, what is your wish list? And more importantly, like Kaushal also mentioned, while we are believing a lot in India's story, but FPI, specifically the foreign investors, are pulling out. Of course, the DIR investing, that's a good counter effect. But what will encourage, the foreign investors to stay back, invest more, because we need that money first also to improve our, India's growth story.
Yeah, no, sure. Thanks, Amol. I mean, I think a lot of the panelists have covered a large part of what the expectations of the budget are. What I want to say, and I think it's very important to contextualize what we've really done over the last 5-7 years, if not the last 10 to 15 years. And I think the budget is really what I really like about the last many budgets is that there has been policy continuity, consistency, and the message both to the foreigners and to the domestic investors at large have been very stable. Reform agenda. There have been a few surprises here and there, like I would have liked no tweaking of the capital gains tax structure for last year, for example. That would have made the continuity even better in some sense. So that came as a little bit of a surprise. I thought, the market performances in some forms over the last many years led to us taking for granted that phenomenon a little bit. So that did surprise me. And in fact, to Kanika's point, and I just want to especially clarify this because there's been a lot of talk in the media as well over fixed income versus equity taxation and the structures and why they should sort of get closer with each other. I have a slightly different view on it, and I think it's important for sure that fixed income market requires significant more deepening. There has to be so much more awareness. There needs to be tax simplifications to drive investments into the fixed income space, both domestic and foreign. But I just want to clarify, I think it's important for the panelists to note that the STT forms a significant part of the tax collection in equities, and that happens irrespective of whether you make capital gains or not. So when you add STT along with capital gains, it's actually a significant amount of taxation that investors charged in their hands when he actually enters the market or exits. So that's something which we need to keep in mind. And when you add both and you pay STT irrespective of whether you make gains, and as a result, there is that needs to get adjusted for. Having said that, I think there is room both on the STT side and the capital gains for you to club it together. There is room And I did really hope to see some rationalization there from the finance minister this time around in the budget. I do know that from a continuity perspective, we just moved the capital gains slightly higher. So that might be the tougher place to tinker with. I hope in some formats, both having an STT and capital gains over the long term, I'm not such a big fan of. So I really hope we see some rationalization there. Coming to, I think some of the things that we've done this year, and I think what is also good is that we're not really waiting for the budget to see policy reforms. There's been a lot that's happened this year, especially on the taxation, on the GST side, also in direct taxes we saw some time back. Some of the transmission, I think maybe we need to see more acceleration there in terms of, both consumption picking up. We did see last budget as being a little more consumption tilted than CapEx, I would imagine. And I really hope that balance, from the intent point of view, we continue to, show very strong intent towards CapEx and CapEx formation, because job creation is a critical part of how we will also drive consumption. So I think both needs to really come through, and that balance in this budget will remain very, very important. In terms of the transmission of the tax rates itself, though there's so much being done in the last many months, I'm not sure whether we're really seeing that on the ground. It could be that the earnings growth overall has been muted anyway in the last couple of years, more coming from the overall confidence that private sector has in terms of investing in what has been a very delicate global environment, macro environment. So maybe some bit of addressing that and really standing up to them in some formats, especially through this volatile phase, will really help push more private capex, and that I think will do wonders to how we are positioned. But net, I think, the budget has become very predictable. It's a very predictable exercise. We shouldn't expect too many surprises. But I do really hope for capital markets we see a little bit of easing on the taxation side.
Certainly, Pranav, agree with you. I think rationalization is needed. Dr. Rajan, sir, let me get you back into the conversation. I think private capex has been the flavor of the season, the theme of the year. I want you to tell us what is going on with the private capex, despite India's story is going strong, despite there is a lot of positivity. What is stopping corporates from investing heavily?
Before I answer this, I would just like to go back on that wish list. So one of my wish lists, which can the freebies be stopped? I know it cannot be, but since you said wish list, am I audible? Am I audible to all?
Yes.
Am I audible? Yeah.
Yes,
so
Rajan.
Wish
Yes,
list,
we can hear you.
so I would like. So since you said wish list, so if the freebies can go, will be a very big. So whether it is in whatever shape and form they are going on, and particularly by the state governments, if that can go, is a wish list. But I keep that aside. Come to the capex, I think there are many parts to it. What the private sector has been looking for is the consistency on the policies, which to a large extent we have been able to, put forth. Of course, there is a scope. Yes, there are a lot of interventions which will come handy to correct that. But one of the major thing is the consumption cycle also has out of the COVID. One of the key thing was that we are sitting at 70-75% capacity utilization. And then over the years, for the next 3 years, it was the operational excellence which came, whether it was re-engineering of the processes, rethink of the processes, managing the inventories better. So that led to a further surplus, capacity being available. Now, post that, I think most of the corporates are today sitting at, again, 80, 85, and 90 being the cusp wherein, the investment flow starts coming in. I think there has been a lot of, at a macro level, there is a lot of assurance which has come through various policy measures from the government. But the corporates need to see the real consumption moving on a unit. So that is one. The second part, at a little micro level, also we have to see that what is it where the government can have the intervention to actually fuel the growth, fuel the consumption, right? And this has to be uh, micromanaged at a sectorial level, right? So it can be either a geography or it can be a sector. Now, whether it is attracting investments coming from outside or investments by the private players, this is something which we will be very, I will at least, at a personal level, I would be watching that with a lot of curiosity, that what exactly are we doing? Is it also being around the macros, or is it pertaining to certain industries, pertaining to certain sectors, pertaining to the large corporates, or it is pertaining to the upside of the employees to generate their confidence to say, hey, look here, now we are creating a conducive environment, and now you can go for expansion, and the consumption is very much in sight, and not from a short term, but from a long term. In my discussion with most of the corporates, the general feeling which comes is that everything being in place, even the interest rates being in a benign phase, I think one of the key concern they have is their confidence in the consistency of the demand cycle, what is actually helping them. So certain measures around that would be extremely helpful.
No, I think meaningful thoughts, sir. I think nobody will disagree with you because everybody believes in the India story right now. But what is lacking is the credit deployment, which should happen aggressively with the industries, and industries are unable to see the demand. I think if that we match it, perhaps industry and whole the economy will get a boost. Noted your point, sir. Let me go back to Kanika and take some economic perspective here. So when we speak about the fiscal deficit, the government has already rationalization the GST. There is also expectation that the DTC indirect tax will get some, impact because of whatever the rationalization has happened now. Do you think the government has a spend according to your economic metrics, to spend aggressively? I'm sure they will still look at maybe the capital expenditure on the public side. Do you think that the government has deep pockets as they had earlier this year?
So thanks, Amol. You're absolutely right. That of course, when you have GST compensation cess going away from this year, in fact, from 1st February itself, last year, as is being discussed, just to boost demand, and mind you, that's a very, very important part of the key covenant the government was trying to create to incentivize private capex to come back on board. But that led to revenue disruptions because there was income tax rate cut and GST rate cut. These measures do weigh on the fiscal space to expand spending measures. So you're absolutely right. That constraint is likely to remain, which is why in the current budget, the way we look at things is this, that at least capex budget, which has, the last 10 to 15 years, doubled from around 1.5% to around 3.1% of GDP, at least it remains stay put at 3.1% of GDP. In value terms, that will tantamount to numbers rising from around 11.5 lakh crores to around 12.5 lakh crores. That's one. Second, on the revenue spending side, of course, there are some sticky components like interest payments, subsidies. The government can't do away with them. Even if they remain stay put, interest payments typically grow by 5 to 10% every year. And even if subsidies in value terms remain stay put, there is some rationalization likely as a percentage of GDP in RevEx X interest payments and subsidies. So you're right, the space to spend is limited. And yes, the government has a lot of centrally sponsored schemes where some burden is being shifted onto states as well. And that also is part of the fiscal framework where we see the center staying committed to the fiscal consolidation roadmap, while states have not shown as much prudence. So that's the kind of fiscal framework we are working with on an economy-wide basis. Thanks.
Okay, okay. Prithvi, let me bring you back specifically on the consumption side. You heard Kanika.
Kanika, just to add to your point, because this is
Sure, sure, sir. Go ahead.
no, go ahead. Yeah. No, I was just trying to say to what Kanika said, this new plan to actually look at the state governments to come forward and show their growth trajectory on prudent means also means that the GST loss which they had post the rationalization of GST, they have an opportunity to catch up with that. So that is extremely important. So tier one, if it is the central government, tier two, if these are the state governments, they have to actually move in cohesion, and that is what will also keep the pace on. Sorry for the intervention.
No, I think that was a good addition point. Thanks for adding that. I mean, good addition. Prithvi, on the consumption side, we are talking a lot. Consumption will drive the economy and everything. How do you see, because you come from a consumer finance background, right? I mean, how do you see the whole consumption story currently in urban and rural India? Government has taken many decisions specific to GST rationalization, taxation rationalizations. Do you think that is actually working specifically? Is your observation? And if that is not working, maybe what do you suggest specifically to boost the consumption going ahead?
So I do think it's working. Consumption
Mhm.
growth is strong and stable.
Mhm.
And in the data, I see it, nationwide. It's not just a metro phenomenon. There's consumption growth in every corner of the country. So I do think it's working. To the earlier point about continuity, what I want to make sure is that we have continuity. If I almost look back on consumption credit growth this year over the last 12 months, it's grown quite a lot by over 40% versus year ago. And I think that's, reflection of demand for consumption and the credit
Right.
supply to support that consumption. The previous year, it had actually shrunk, right? The previous 12 months, right, between 2024, 23 and 24, it had shrunk, which, was a bunch of restrictive measures that had been put in from a policy viewpoint, both by the RBI and by the finance ministry. But that did mean that the base was low and that, there was a lot of pent-up demand to cover up. So what I would really look for is just continuity. I think the government has acted very proactively with, risk weightage, credit, liquidity supply, GST rationalization to support consumption. And I think the best
Hmm.
thing we can do is, continue down that trajectory. So at least for
Right.
the next few years, consumption continues to support the economy. One wish I would have from a consumption
Hmm.
viewpoint is encourage more innovation, right? We've had some
Hmm.
fantastic innovation in fintech in India, things like
Hmm.
UPI, and even less talked about things, the credit bureaus, account
Right.
aggregator. And over the last few years, I think we've really consolidated on those gains. We want to, have the next wave of such gains coming through. And there's a lot of
Okay.
innovation possible with, data on education, on vehicles, on property, all of that coming into the fintech ecosystem, more broadly, the banking ecosystem, to enable
Hmm.
responsible credit supply and therefore
Hmm.
continued growth of consumption. And I think every budget, every policy announcement is an opportunity for us to enable that. So,
Certainly, I think noted. Those were the meaningful thoughts, Prithvi, no doubt about it. Uh, because consumption has become an integral part. If you want to boost the economy, no doubt about it. Let me bring Kaushal back here specifically on the IB side. Kaushal, I mean, IPO market has rebounded, no doubt about it, and I see a greater pipeline this year itself. Going ahead. But if we were to look at M&A activities, IB activities, corporates, again, the private capex is low. People are coming to market to raise more funds, not going to the traditional ways, perhaps the banks. And they're still complaining about maybe the taxation, maybe the ease of doing business and everything. Considering now the geopolitical tensions and everything, what do you think government should do to repudiate and reduce the burden on the corporates, which will help, in fact, investment banking to push M&A activities to flourish, and more importantly, foreign investors. Again, you mentioned here, but specifically, to push the whole private capex cycle going ahead.
Yeah. So see, if you look at from a private investments perspective into India or in terms of the Indian targets, I think the whether it is the strategic investment or the private equity investment, they have been doing that quite regularly over the years. However, I think one thing that the investors ask for is a clarity, and again, the same point talked about is in terms of the continuity of the policies. Now, what has impacted, say, some of the private equity investors in the recent time is the judgment with respect to what is the how relevant is the TRC and the Supreme Court judgment that came with respect to Tiger Global clearly has raised concerns with respect to the investors in terms of the process that they have been following till now. And to that extent, the question is that what is the right way, what is the right format in terms of operating. Now, when these investors have a clarity and a continuity, it makes life simpler. They can focus on business and not in terms of the process or not in terms of the taxation. So I think that is one point that is very clear from the investors' perspective, that they need to take out the procedural aspects, more of the taxation aspect out of the way, and let them focus on the business part of it and the investment part of it. So I think that is one point, and if there is clarity, whether it is in the budget or later on, I think that will only help the investor community. I think the second important aspect is I think what the market needs is a lot more, I would say, a stable environment, because what they don't need is a volatility. Now, volatility can come from whether it is aspects which are not in our control, whether it's a geopolitical aspects or the otherwise. Or in terms of the fact that, as we were discussing, that while the macros are so strong, why is it not showing up in terms of the EPS growth for the companies? And to that extent, whether it is the risk appetite of the corporates or whether it is a support that is required for the corporates to invest more, do more capex, is something that I would effectively leave the government to decide. But I think that is the second aspect that that is in focus, and in terms of converting how the government capex leads to in terms of the capex by the private sector. So I think that is the second aspect. The third aspect is that if you look at from the market perspective, I think today it is not a question in terms of the funds not being available. As highlighted, even the FIs, while on one side they have been taking money out, but when it comes to transactions, they are pumping in money. And again, from a data perspective, last year, if you look at CY25, of the total fundraise by IPOs and QIPs, the total primary money raised by the companies is around about 150,000 crores. And the secondary, which is more of a OFS or a secondary sale, is somewhere around about 112,000 crores. Now, what is important is that the preference, of course, is that the money to go into the company, just so that the money is being used for whether it is a capex or a growth or a deleveraging, right? Now, that is what, again, from a investor perspective, that they like. Of course, they are a little indifferent in terms of how the funds are raised by the corporates, but the more money that goes into the company is always preferable. And the last point is that we were talking about the credit growth. Now, interesting point here to look at is that if the asset quality is increasing, and which we expect that the asset quality will be a lot more stronger in the current year as well, why is it not leading to in terms of more credit growth? Of course, the expectation is that the credit growth will increase, but at least till now we have not seen that particular impact. So all this just highlights in terms of what is it that the corporates in the private sector need to do in terms of having more risk appetite for the capex, and to that extent see over the next 3 to 5 years from a growth perspective, and not necessarily from an immediate perspective of maybe 6 months to 1 year.
Okay. Kaushal, relevant points. Let me shift my focus slightly to Pranav on the market situation. Pranav, while we are happy the way the market is going, SIPs are coming, but the underlying story is this, that the people are not finding deposits more attractive and perhaps shifting to SIPs because they think that there has to be some savings for the retirement. But while we are bullish on Indian market, experts globally are saying that Indian market is quite overvalued right now. That's also one of the reason a lot of investors are taking money out. What do you think has made Indian market really overvalued? Is it a good time, bad time for the investors?
Yeah, no, sure. That's a very good question, Amol. I think it's basically there are two variables here, right? One is valuation predominantly consists of what your earnings growth fundamentally is, and therefore what you really arrive at. And the truth to be told, the valuations have corrected in the last year or so. But in the context that we have seen, we are a market that was expected to grow in the mid-teens, right? And we haven't grown at that pace. And therefore, in the last year or two, some of that correction and some of that pessimism is sort of par for the course, because we did see some moderation in earnings growth. Having said that, I think all the early indicators in the last 3-4 months are suggesting that we should see a reasonable rebound, and I'm pretty optimistic about that coming through, and that hopefully will lead to flows coming back. And foreign flows is also a function of just on capital account, etc. What's the currency is doing, right? Because currency adjusted returns have been even harder to find. And therefore, I think it's a little bit of a chicken and egg. If you have your earnings coming back and some of the foreign flows coming back, and that confidence in the flow will lead to hopefully the currency becoming more stable, and that will lead to in turn some more foreign confidence. Having said that, and I think this is a question you asked Kaushal, but also interesting has been, and I think what is tougher for the equity markets has been, despite the fact that there's been a really good flow of domestic money into the system, and it's found increasingly they've been optimistic about equity markets, and even through these volatile phases that we have seen, like you mentioned as well, the SIP book has been stable, and generally speaking, I think the domestic flow has been steady, and I would have expected I think for a lot of us who have seen those volatile flows in the past, I think the last 2-3 years has given us tremendous confidence that people actually invested really for the long term. Having said that, I think the fundamental thing that you need to watch out for is the amount of capital, the IPO market plus the capital raise that we have seen in 2025, and the expectation that you will see even more of that in 26 has broadened the capital markets at large, but it has also meant that much of supply being absorbed by the market does mean that you might not see the kind of returns you saw in the past. So there is also that function that we need to keep into account as the market becomes more mature, and it has clearly over the last few years. I think the expectations have to moderate, and I think what you're seeing in the last few years is expectations moderate. So there are all these factors to keep into account, but to conclude this point, I would really think that as earnings start to come back, foreign flow will come back. That will give domestic flow some more confidence, to continue to stay invested and take, at least, at this point, people are taking more monthly income calls. Maybe they'll take more allocation calls at that point. So I did hope we see portions of that. But having said all of that, you might not see the kind of huge jumps in equity returns you've seen in the past, purely because the supply side continues to be quite daunting.
Sure. Rajan sir, let me come back to you. And a very simple question to you now is, because I'm sure you are dealing with millions of customers which are middle class. What approach government should do and take specifically for middle class at large? Last budget also, and last to last budget also, the government spoke about middle class quite aggressively. There are a lot of provisions specifically done for affordable housing finance also, which automatically helps banks also to push, because a lot of NBFCs partnered with banks. But when we looking at middle class, shaping up middle class, what approach do you think government should do specifically from bankers' perspective?
So this is a Quite an interesting question. Actually, I wanted to intervene even in the previous discussion, but
Sure.
exactly talk on similar lines what you spoke. It's very important to understand that while lot of macros are looking good, right? Intervention from the government is very good. They've done a lot on the tax slabs. They've done a lot on the GST, which basically has led to increase in the disposable income. So the money in hand of the middle class has actually gone up. But I wanted to throw some figures, at the panel.
Sure.
We have, if you look at the bureau trace of individuals in a population of 140 crore plus, only 60 crore people have a trace in bureau as individuals. Out of that, the regular trace is only by close to 12 crore people. Out of this 12 crore people, only 2 crore people are active users of credit. Now, it's not a matter of the customer coming to the bank or the bank or NBFC going to the customer, but this is the mass we are talking about. We are talking about 2 crore people only. Now, shift that to MSME. We have a trace of around 4.5 crore MSMEs who have a bureau trace available. Out of that, the active consumers are only 90 lakhs. Now we have to size it up and then look at, do we need top down or we need bottom up? Right. So this is one question, which I think should rattle our mind, and we should have a wider thought process, because when it comes to from bottom up approach, you will have to dissect, and then you will have to have a very sniper approach to say that, hey, look here, this is what I will induce in this particular segment, which will result into either increase in spending or increase in consumption. Now, come to the second point. We have been talking about what more to do with middle class. So there are only two answers. One is give them more money to spend, or give them more money saved out of taxation, which can be given, or third one can be at most bring down the prices. So these are the three things. I think all three things have been done. But what is required right now is, how do we add on more people to middle class who are new consumers and who also contribute to the spend being made by the middle class, so-called middle class. Now, clearly the answers to that are, one is skill development, which is again a very, very important point. And if you go down to agriculture, I think there we need lot of skill development to enhance the productivity, enhance more money in hand. And this is directly proportional to how the corporates' confidence on the capex will also come. Two is, we have a lot of sectors which have got impacted due to the turmoil across the globe. Now, out of this turmoil, what kind of responsible positioning the government can take to go down to into those specific fields? Take example of textile, and these are some of the industries which have a huge employment at place. So what do you do? Either you deploy them into something, or you do skill development, or you give boost, or you actually handhold that and help them to serve new markets. So these are various measures which will widen the so-called middle class into that consumption population which is spending the money. So a lot of focus has to. So we have done whatever we could have done in terms of money in hand of the existing segment. What exactly do we do in adding on and widening that segment is something which is going to be more important in India's run, not just for a year or so, but also in many years to come. One related point is, while we say that there is stability, there is credit stability, and things like that, please understand, we haven't seen the corporate capex coming in, and hence we have not seen large corporates or the upper side of the medium class who are at the cusp of becoming large corporates taking money from the banks. So where is the question of them behaving bad or good? Issue is they have hardly taken money, and hence there is hardly any repayment track record. Your retail segment has seen a turbulent phase in the last 1 year, and thanks to some interventions by the regulator and some corrective measures being taken by NBFCs and banks, and we are seeing slackening of that trend. So today that sector also is behaving well. Last but least comes to MSME, which is going to be the backbone of the economy, both from a consumption as well as from manufacturing, trading, etc., all the fields. We need a larger focus on that. And when I said there are only 95 lakh customers to 1 crore customers who have a easy access to credit at a reasonable cost, what is it we do to widen that? Now, I can go location specific, we can go industry specific, we can go sector specific, we can look at the sectors which are export oriented sectors. You can bifurcate it in many ways to come forward. Some by virtue of making money being available to them at affordable cost, and some by virtue of interventions which can increase their throughput or the productivity, right? One of the focus can be that go for all the MSMEs who are involved in, of course, on the supply chain basis, who are actually involved in Atmanirbhar Bharat, Viksit Bharat, who are involved in that. So can we pick them up? But some dissection and some focused approach to see that the output coming from each one of them cumulatively increases the consumption pattern, money dispersal, and also them playing an active role in the overall economy. And this is what will make India reach whatever we talk about 10 trillion or 20 trillion. So these are the fundamentals which we have to look at. So no broader level expectations on the budget, but these micro interventions, I think, are going to play a very important role, and not just looking at today, but also tomorrow.
I think those were highly relevant and realistic points, and it's not just broader but quite specific one, because we are praising a macro story a lot, but micro has issues. And like you said, sir, out of 60 crore people who can be traced, only 2 crore people are there, who are in the market. Similarly, I had a CBDT chairman, former CBDT chairman, in my last budget episode. She said that out of 9 crore taxpayers, only 3 crore are actually paying tax, and 6 crores are just zero returns. So we have to look at the important numbers as well. So in a different way, only 3 crore people are running the country, perhaps, right? Noted your point, sir. I think time is slightly limited, but apart from now, Rajan sir has given a great view. I would like class story forward and start with Kanika, maybe 1.5 minutes each one of you. What approach specifically government should take, to strengthen and shape up the middle class of India going ahead, and specifically starting with this budget? Kanika ji, please, let's start with you.
Thanks, Amol. I would say 3 points. First is in this budget itself, because last year income tax cut, GST rate cut was all focused on the middle class. Government is cognizant of that. Policy continuity on these taxes important. That's one. Second, I would say I would agree with what Dr. Pentel said. Focus on MSMEs and the labor-intensive sectors, because some of these sectors have been affected by the US-India trade deal being delayed. We have not seen much impact, thankfully, last year, but maybe we get to see spillover effects this year. Compliments to government for India EU FTA, but these segments need to be the focus areas: labor intensive sectors, MSMEs, textiles, gems and jewelry. They're all important. Last but not the least, we all talk about research development, skill development, education budget. If you see, for the last 2 to 3 budgets, the government consistently has been touching upon employment intensive and skill development schemes. Now, and in fact, in one of the budgets, I think not the last one, but last to last, which happened post elections, we actually saw a 5-year plan on incentive provision in the budget. What is what was the target, and what is the actual outcome achieved till now? If some sort of a color can be given in the current budget, and maybe following up on the action plan further in this budget, even that would suffice at the current juncture. Thank you.
Sure. Noted your points. Kaushal ji?
Yeah, I think the way I would look at it is there's always a question about short term versus long term. And the way I would think about the middle class and the overall economy is to focus on investments. I think that continue. And the other aspect is that I think my colleagues mentioned about innovation, but whether it is innovation, whether it is R&D, whether it is pushing the middle class to come out with newer formats of business, newer formats of how the business happens, whether it is in terms of AI, whether it is in terms of the different industries. I think that is what needs to be pushed. Eventually, end of the day, short-term measures don't help. What is required in terms of creating a platform, which is where it'll come from, not only the investments but investments into what we can derive over the next 3, 5, 10 years. I think that is the need of the hour, which is already happening. But I think that is something that we should continue and focus a lot more on those aspects.
Sure, Kaushal. Pranav?
Yeah, hi. Yeah, so I think one of my major concerns has actually been how household savings have been coming down, and it's I think way down from anywhere in the mid 20s to almost 17, 18%. So a lot of the consumption is actually being driven by drawdowns, and that's something which I think that hopefully the budget makes an effort to address. So I would think that in the context of the cleanup we saw, the simplifying of tax structures, GST framework, really the next level is to ensure that these reforms that we have already undertaken visibly translate into higher incomes, stronger consumption, and by that I also mean like accompanied by better job creation, and we spending more money on R&D, thinking more long term, thinking more capex. And I think just given all that we're seeing on the trade front with all of the India EU plus we've seen, and hopefully the US trade deal also happens at some point soon. I think all of this gives us a framework and policy continuity to really double down on capex and investment and make sure that that can lead to like significant visible job creation on the ground, which will bring the confidence back. Sorry, Amol, you're on mute, I think. Can't hear you.
Yes, Pranav, those were remarkable points. Prithvi, can you add yours as well?
Final point before we're out of time. I think many of my colleagues have talked about the middle class and looking after them in terms of what we can do in the short term and what we can do in the long term. The consensus seems to be that in the short term, over the last year or two, we've actually looked after the middle class very well by providing more access to credit, rationalized GST, even controlling inflation despite the macro problems internationally. Let's not give up on that. There is a lot more to do. The macro problems internationally aren't over. Let's continue to support the middle class in maintaining consumption, even over the next year, 2 years. In the longer term, of course, it will be much more fundamental solutions like education, like more rational tax structures, like job creation, both through capex and through support for MSMEs. All of these things lift the entire economy. The middle class will inevitably benefit. My view is that we don't need to call them out specifically in the long term. The right thing for the economy will be the right thing for the middle class. To Dr. Pentel's point, many people who are not in the middle class will rise to that stratum automatically. But really, let's not leave it as job done in terms of looking after the middle class in the short term. Volatility will continue. Let's continue to support them from a credit access as well as from a money in their wallets viewpoint. That's it. Thanks,
Sure.
Amol.
Yeah, sure, Prithvi. I think those were highly relevant points from all of you, and it was a productive discussion. I hope a lot of points that we discussed, and I think discussed throughout in this journey over the budget. Perhaps we'll see a couple of them in the budget. Let's hope that. But for now, thank you so much, for sharing those inputs on this platform, and giving us a hint about what actually you expect from the budget. Thank you so much for your time and the patience and the relevant discussions that you shared here. Thank you so much.
Thank you.
Thank you.
And pleasure.
Thanks, Amol.
Thanks a lot.
Thanks to my co-panelists.
Thank you.
Bye-bye.
Thanks. Bye.
Bye.